Hi, I'm Greg Reed. I'm a lead portfolio manager with Westwood's Energy Infrastructure business. I'm here to provide you an update on September 2023 results and also talk about the year-to-date performance. So in terms of September, it was a pretty quiet month. The midstream energy averages were down about 70 basis points for both of the main midstream averages. The Alerian MLP index, however, was up about 3.2%. That's primarily a result of the buyout of Magellan's MLP by ONEOK, which closed in September, as well as kind of the scarcity value with three different MLPs being acquired here going into the fourth quarter. Year to date, it's actually been a solid year, up about 7% for the Alerian Midstream Energy Index, and the MLP sector of that index was up 20% year to date, showing again the benefit of some of the buyouts that are occurring in the MLP section of the MLP of the midstream averages. If we look at broad energy, the XLE ETF was up about 2.4%, bringing its year-to-date gain to 6.1%. And so good news, generally speaking, for traditional energy. To contrast that, the renewable energy indices had a tough month, down 9 to 11% in September, bringing their year-to-date losses to 25 to 29%. So what we're seeing is traditional energy assets are doing quite well with strong oil prices and volume growth. On the flip side, the renewable energy companies are struggling because of higher interest rates, which compresses their valuations in a more challenging year this year. Looking at commodity prices, crude oil was up strongly in September, up about 9%, bringing its year-to-date gain to 13%. And natural gas was up about 6% in September, but still down a lot on the year, down about 34%. So we're seeing pretty depressed natural gas prices here in the country. Looking at the three segments, we oftentimes look at the C Corp averages first. For September, they were down about 2.6%. In general, pretty quiet month. The one outlier is NextEra Partners, a renewable energy company, was down 40%. They lowered their growth rate, cut it in half actually, and the stock has really struggled here at the end of September into October. On the positive side, DTM Midstream and Cheniere were both up 1.5 to 2.5% in September. The MLP averages were a lot stronger. They were up about 3.7% in September. The three notable companies, USAC, CAPL, and Sun, were up 6 to 12%. Those are MLPs that are going to be reweighted higher in the MLP indices with the departure of Magellan, which was a 12% weight in the index. And then looking at the Canadian averages, we can actually see that all six names are down for September. The reason why that is occurring is that those Canadian companies tend to have higher leverage, and interest rates have been rising all year, as you know, putting pressure on companies that have higher amounts of leverage. And so in particular, Enbridge was down about 5% in September. As we look at the year-to-date results, the C Corp averages are good at about 5%. They're led by E-Train up 50% year-to-date, so a very strong showing there. Plains C Corp is up 37% and Targa's up 18%. So a very solid showing. On the largest loser category, it's a renewable company, NextEra Partners, down 55%, which lowered their growth rate and their dividend and is really suffering from the rising interest rate phenomenon this year. And then Tellurian is a small cap midstream company without much in the way of assets. It's down 31%. The MLP average really does jump out on this page. The average MLP is up 18.5%, led by Magellan, which is up 45% year to date. Magellan, as you probably know, was acquired by ONEOK here in the last couple of weeks. That deal did close, and so Magellan ceased being a public company. Plains is second, year to date up 38%, and USAC is up 32% year to date. So really a solid showing across the MLP sector of the market, which is about a third of the midstream universe today. And really not much to report in terms of lower performers. The worst case scenario, Westlake only down about 1.6. And then bringing up the rear, Canadian averages are down about 1.8% year to date. So a pretty weak showing, only two positive performers, AltaGas up 15 and Key Energy up 13. But really the most notable thing is that the two market leaders in Canada, Enbridge is down 10.4% year to date, and TransCanada or TRP is down 8.6. So the two largest companies are struggling. And the main point there is that they've really suffered from rising interest rates, has put pressure on their balance sheets, which tend to hold more debt than the U.S. counterparts. And that's led to pretty significant underperformance in the Canadian midstream companies year to date. Now, I wanted to draw your attention to valuations overall. We saw an interesting chart here comparing midstream energy valuations to utility valuations. And if we go back in time, you can see back in 2018, so about 5 years ago, these companies traded at about the same multiple, 10 times earnings or EBITDA. Since that time, utilities have generally outperformed and traded at a higher valuation level. And even after a difficult year this year where utilities are down 15%, they still traded a premium multiple about 10 times EBITDA compared to midstream energy, which has strong free cash flow and lower levels of debt, only trading at about 8.6 times EBITDA. We think that is a undervalued situation for midstream. And so if you think about those two asset classes, pretty similar in terms of return outlook for most people. We think that midstream could potentially trade more in line with utilities up at about 10 times EBITDA. And if that were to occur, that would lead to about 30% higher returns for midstream. When you factor in the debt on the balance sheet, that means more of the revaluation potential would translate into returns for midstream. So just interesting to note that midstream can use to trade at a discount to utilities, and a lot of that is really the COVID decline. As you can see here, midstream traded down from 10 times EBITDA prior to COVID down to about 7 times. And while it's rebounded to about 8.6 times today, there's still some revaluation potential, in our opinion, to trade more in line with utilities. And lastly, there's been a lot of M&A activity in the midstream energy space. We've seen Magellan get acquired here recently. Crestwood agreed to be acquired by Energy Transfer. Then Holly is getting purchased by their parent company. So 3 different MLPs are basically going away here at the end of 2023. There's been a lot of activity with public companies like Gibson buying Buckeye's Corpus Christi crude oil export facility down in Corpus Christi. Energy Transfer also bought a private equity-backed company called Lotus Midstream. And then lastly, Western Midstream bought Meritage. So quite a bit of activity in the midstream area. And then not to be undone, we've seen some very large transactions in Canada. TC Energy sold a 40% stake in Columbia Gas Transmission for about $5 billion in Canada. And then Enbridge acquired a whole suite of gas utility assets from Dominion, a large utility in the United States, for $14 billion. So we've seen a significant amount of M&A activity. And then here just a couple of days ago in October, we had a rumor leak out that ExxonMobil may be interested in buying Pioneer. That's not been confirmed yet, but the stocks have traded up. And so the question we're getting from a lot of investors is a wave of consolidation upon us? And it feels like to me that that's upon us, and certainly a large transaction like a Pioneer deal at $60 billion could very well lead to a continued wave of M&A activity in the energy space. So in wrapping up, our themes for the year are basically on track. We're seeing outperformance from energy infrastructure up 7 to 8% year to date. We're seeing global demand for energy increase as the economy has actually stayed out of recession and seems to be growing at a pretty decent clip. And we've seen crude oil volume growth come in this year, about 500,000 barrels, in line with our expectations. Going forward, we think we'll see about 500,000 barrels of growth in crude next year and in 2025. And at the end of the day, that volume growth is what drives our cash flows and provides a positive outlook for our space. Higher volume growth leads to a more attractive cash flow, and a lot of that cash flow is being returned to investors from dividends and share buybacks. So with that, I'll wrap it up, and thank you for dialing in. We'll be looking forward to earnings here in the next couple of weeks and look forward to our next update call at the end of October. Thank you very much.